Don't know. Uh, Joining. Did I share the topic that you are supposed to expect for the evening, students? I did not share, so we can talk of them. Then we will be able to begin. So this is advanced financial reporting, the analysis blocks. Now, prediction topics. Prediction topics. One is the company reconstruction. Say the higher chance is on internal reconstruction. Number two is on the group accounts. Group accounts, I said, is either on the foreign subsidiaries, or what we call the foreign subsidiary or the disposals. What we call the disposal. Disposal, we are talking of the disposal of interest in a subsidiary. We are also expecting the group cash flows. The group cash flows, earnings per share. That is the EPS, earnings per share. And also number 5, deferred tax, that is on the income taxes. Payment of assets. And then not forgetting on what? The theories. Not forgetting on the theories. Those are the topics that we are expecting on this particular sitting. So we'll do the revision on the basis of all those areas that have been able to highlight. We do the revision on basis of the areas that have been able to highlight. So on the advanced financial reporting and analysis paper, on the advanced financial reporting and analysis paper, we can do the following. We're doing the sitting of November 2016. November 2016. I do question number November 2016, we do question 3B. November 2016, question 3B. I begin with the company reconstruction. That will do on the internal reconstruction. Company reconstruction, we are doing on what we call in the internal reconstruction. On the internal reconstruction. November 2016, do question 3B. November 2016, we do question 3B. November 2016, we do question number 3B. So the following is a summarized statement of financial position of P Limited. As at 30th June 2016, given all that information, we have the additional information. The court approved a scheme of reorganization submitted to debenture holders and agreed upon by other interested parties to take effect on 1st of July 2016. Details of the approved scheme are as follows. Given there, the 6% debenture holders were to have their interest paid in cash and to take over freehold property, book value of 160 at a valuation of 192 in repayment of their holding. The 6% debenture holders are also to provide additional cash of 208 million secured by floating charge on the company's asset at an interest rate of 12% per annum. Patents of goodwill are to be written off, and we've been given there the shillings 120 is to be written off for inventory. 93.6 million is to be provided for bad debts. Remaining freehold properties to be revalued at 620 million. Investment was sold at prevailing market value. The directors were to accept settlement of their loans as to 90% thereon by allotment of ordinary shares at fair value, and as to 5% in cash. Balance of 5% was to be waived. Trade payables are to be paid shilling 0.1 in every shillings to maintain and obtain an extension of credit period. Bank has sanctioned an overdraft limit of shillings 10 million to provide working capital. 6% preference dividends are 4 years in arrears, and of which 3/4 are to be waived, and ordinary shares are to be allocated at fair value for the balance. Given there that the 6% preference shares are to be written down to 7.5. Existing ordinary shares are to 2 shillings. All the ordinary shares are to be consolidated into shares of shillings 10. The rate of dividend on each on the preference shares is to be increased to 10%. Given there that there are capital commitments amounting to 600 million, which are to be cancelled on payment of 3/3 of the contract price as a penalty. They require the capital reduction to record the scheme of reorganization. You also given the statement of financial position of P Limited to close up business on 1st of July 2016, immediately after effecting the scheme of what? Scheme of reconstruction or reorganization. So I'll begin with maintaining a capital what? Capital reduction account. Now the capital reduction account here, we've been given shillings in millions. So I will have the shillings in million, and I will also have the what? We'll have the shillings in a million. So the capital reduction here will be based on what we call in the what? The additional information. So we'll just get to the additional information. We get to the additional information number 1. On additional information number 1, moving everyone is there. On additional information number 1, this is what you've been given there. what you've been given. Been given that the 6% debenture holders were to have their interest paid in cash and take over. So that means on the cash, the amount that they will receive it will pay the what? The interest. They were also to take over pre-owned property at a book value of 160, at a valuation of 192, as in the part of repayment of their what? Holding. So what we've been told that here they are given pre-owned property to pay their what? Their debts. So you'll ask yourself, is it at a gain or is it at a loss? Does that mean it? So we continue now. Now, the thing is here, he transferred property to pay what? the loan. Now, this is what I said when we were talking about the capital reduction. If it's an amount that is reducing the capital, you will debit. So, if there is an amount that will be increasing the capital, you do what? You credit. Is that okay? So we'll begin with that. There was a transfer of property. The property was worth how much? 192, but it was to pay how much of that property? We were to pay 100 and what? 60 million of the property, meaning that in this case is on an asset. When you increase an asset means that in this case it will increase your capital. So that means in this case it will be the gain on transfer. This is of property. It was of how much? They transfer the property at 192. So minus 160. How much is it giving you? 192 minus 160. How much is it giving you? 192 minus 160. How much is it giving you? Yes? How much? 30. Or 32. We continue. We're also given that the 6% debenture orders, that is additional cash of 208. So. And also it is increasing our debentures. Patents and goodwill are to be written off. So we begin with the patents. Patent is ngapi? Patents, they were worth how much from the trial balance? 240 what? Goodwill was of how much? Yes? 224. Now, inventory was written down to how much? Was written off of how much? 100 and what? 20. So we will also debit that inventory of 120. Also, there was a provision for bad debt, that is on the receivables. Receivables was written down by how much? On the same, that is 93 point what? 93.6. We were also told that the remaining pre-owned property is to be revalued to 620. So the pre-owned property that will be revalued will be how much? Initially, the pre-owned property is at 600 and what? 8. There is this 160 that they have used to pay off the debenture. Imebaki ngapi? Yes? 520. When you look at that one, it was revalued to how much? So that is a revaluation gain on pre-owned property. So revaluation gain on pre-owned property will be how much? Freehold property. So this will be how much? So it will be 680. 620 minus, this is 680 minus what? 160. You said it is at how much? 100. Sorry, 100. We continue. We've also been given that directors were to accept settlement of their loan as to 90% thereon by allotment of shares, and to 5% paid in cash. The other one was written off. What was the amount that was written off? We were given that the 5% is the one that was waived. So we can have the waived director's loans. Director's loans waived is of how much? To be that 5% of how much? 5% of The director's loans of 100 and what? How much? 80. 8 shillings. Yeah, that is 8 shillings. You also been given that, so you remember to consider the one that was allotted for shares and the one that was paid in what? In cash. It will be reducing our cash. We continue. There was also on what we call in the trade payables are paid in cash. That will reduce our cash. The number 5, that is an overdraft. That will not be of any use. Preference dividend are 4 years in arrears. So we need to know the preference dividend. Preference dividend. They are 4 years in arrears. So you just take 6% of how much? 6% of on equity and liability, they are 640. Then you multiply by 4. It is how much? 153 point. Out of that, we were told that 3/4 was waived. So we'll have the waived preference dividend. Dividend is 3 over what? 3 over 4 of 640. Not 6 of 153 point what? Yeah, the total 153.6. How much is it giving you? How much is it giving you? 1.2. You were also told that the free prime shares are written down to 7.5. That is written down to 7.5. So they may go reduced by how much? Preference shares. We know the number of shares. They are how much? Yes? Should I debit here? No. You will debit the what? Preference share capital, you credit here. So I should credit preference shares. So it will be the shares, they are 64. You multiply by 2.1. They have been reduced by how much? 2.5. From 10 shillings to 7.5. So 2.5 times 64. Is how much? 160. We also have the ordinary shares. They were to 2 shillings. So ordinary shares. That means it's from how much? It is from 10 to 8. That is 8 shillings. So 120 times 8. 960. There were capital commitment amounting to 600, and they were cancelled by a payment of what? Penalty. So the penalty was of how much? It will be 3 and a third. 3, 1 and 3. You multiply by, this is how much? 600. Yes? On the preference share capital itself, itafanya nini? You debit the preference share capital. You credit the capital. Return. Yeah? Yeah, you have to have a different account for ordinary shares and preference shares. Yeah, from the whatever is on equity and liability, their balances are on the credit side. So if you debit, they would be on the what? Debit side. So this how much is it giving you? Yes? 20. So get the total. This is 855.2. Or we have not put accumulated losses. Include the accumulated losses. The accumulated losses were of how much? They were 6556. So make sure that you add that 656. 15, 11.2. The other side you check. No balancing. This is 13. 75.2. A difference of how much? Or did we read this one they sold? On additional information, number 2 have not included the investment that they sold. How much did they sell it at? The investment that was sold there, they sold the investment at a prevailing what? Market value. And the market value was 224. So there was gain on sale of investment. That is on sale of investment. I forgot that. The sale of investment there is 224 minus 88. How much is it giving you? 24 minus 88. 130. So you said now if I add 136, this side will be more. Eh? So yeah. Add this 1375. You add the 136. Balance it. Add it. So it will be 15, 11.2. Yeah, it has to balance. 11.2. So we can now finalize. I'll do now on the ordinary shares. Ordinary share capital. What is the balance as at the beginning of the ordinary share capital? Yes? Balance broke down. You said is how much? We've been given there it's 1200, right? We'll have the capital reduction. We've reduced it by how much? We've reduced it by equal up 960. All right. Now, there was a dividend that was settled by issuing shares on additional information number. That was on number what? Let me begin with number 3, directors' loans. They converted directors' loans into ordinary shares, 90% of it. So just take 90% of directors' loans, which was 100 and what? How much is it giving you? 100 and what? 44. There was also the preference shares, preference dividend that was paid in form of dividend, preference dividend. They were given shares. So preference dividend was of how much? A quarter is what was, 3/4 is what was waived. The other balance is what we consider 153 point. How much is he giving you? Yes? 38.4. Preference shares, were they converted? No, they were written down to that value. So we don't have anything on the preference one. Yes? It will not have any impact. When you consolidate shares, it means that you are reducing the number of shares as you increase the what? Value. So at the end of it, the value remains. So if you balance them, how much is it giving you? What will be our balance carried down? The total is 1382.4. 1382.4. So what will be our balance in figure? 420.4. 422.4. We can also have the cash or the bank account. Bank account. So I have shillings in million. Here the shillings are in million. We had a bank overdraft. What was the bank overdraft? It was of how much? 312. So on additional information, number one, they received 6% debenture. The 6% debenture was equivalent to how much? 2 or what? That is the cash that they received. On sale of investment, they sold the investment at the market value, which is 220 what? 224, right? From the statement of financial position under the current assets. We'll also have this other one is on additional information, number what? That is on number 3, the director's loan. Walilipa ngapi? 5%. So 5% of 160. They paid how much? That is 8 shillings. They also paid what else? The trade payables. Trade payables wamelipa ngapi? Trade payables, we were told that 0.1. So you just take the trade payables, which is 400 times 0.1. That is on additional information number 4. How much is it giving you? Yes? 40. 40. And then we also have the penalty. The penalty was of how much? Penalty there we were given of 3.1 of this is 600. Said is 20. 20. Interest was also paid on additional information number 1. The interest payable. It was of how much? Interest payable was 36. So you can balance. The balance, how much is it giving you? What is our balance carried down? What is our balance carried down? On additional information number 1, the 6% debentures were to have their interest paid in cash, all right? On interest payable on current liability, you've seen that the interest? The debenture interest payable of 36. So if you balance that, what will be the cash at bank? what will be the cash at bank? Yes. For 16, and this one, 430. So this one is more by 16. So we can now present statement of financial position. So this is P Limited. And now the statement of what? Financial position. This is as at when? As at. This is as at the 1st of July 2026. Now shillings here, they are in millions, which is shillings here in millions. So we'll begin with assets here. Begin with the non-current assets. On non-current assets, we begin with the freehold property. Freehold property. Now, the freehold property was taken over at how much? 600 and what? You are given on additional information number 1. Is it number 1 or number what? Number 2. The remaining freehold property is to be revalued to how much? 620 million. All right. They were to be revalued to 620. We'll also have the plant and equipment. That is the plant. Plant, it was not adjusted to any, so it will be at 80. So we continue. Goodwill and patents, they were written off, so I'll just go directly to the current assets. Current assets, we have inventory. Inventory was of how much? It was 680, but there is the amount that was written off of 120. So what is the balance there? 506. We have the trade receivable. It was of how much? It was 776. There is a provision for bad debts of 93.6. How much? 682. 682.4. There is also what we call in the bank balance, which is now what we have in here of 16. So get the total here. For the investment, they were able to sell them. So get the total asset. What is the value of the total assets? Yes? 1958. Equity and liabilities. I'll begin with the ordinary watch. Ordinary shares. What is the value of ordinary shares? We've computed them there. It was 422. 2.4. Preference shares. You just check the shares, they were written down to how much? Preference shares, they were written down to 7.5. So you just check 64, you multiply by 2.5. This is how much? 460. 160. You go to non-current liabilities. Current liabilities. On non-current liabilities, we have there was a 6% debenture. It was 600. Plus these are the one they were able to issue of 208. How much is it giving you? 808. We have the current liabilities. We have the accounts payable of how much? Account payable was 400. Yeah, minus what was paid, which is 40. This will be 300 and what? And then we add the accruals. Accruals, they are of 80. So get the total equity and liabilities. Huh? 13? A difference of how much? Yeah. What is it that you have not considered? %, debenture. That one we consider. Take over property at 162. That is 192. Directors' loans, that one we considered. We had a director's loan on preference shares. What is it that I have now considered? You look at that one, what is it that I have not considered? Nafisa, naona ni gani hapo hatujaweka? What was the remain? What remained in ngapi? Yes, hizo zingine write off. So we're supposed to use what was the remain. What remained? Is even the dividend, all of them they were paid. Huh? Mm. It will not have any impact, meaning that now from the other year, that is when they will pay the dividends. Na mmefanya vizuri competition. The values they are okay. Yeah? Hapo mmekosea. So just get low of 100 plus 144 plus 38.4. Nakupea ngapi? Iko sawa? Iko sawa? Si mimi naona vibaya. So 1384 minus 960. Hapa sasa sijui wapi kosewa. That is okay. Twenty-four, 32, 36, 20, that's 14 minus 8, 16. I think everything that I look at, I see is very much okay. I don't know where the problem is. It's just the same question that you have in, should be the one in November 2020. Just the same, I think should be looking the same as this one. The one in November 2020. Information number 5, they can sanction an overdraft note. Hiyo haina any use. Sawa sawa. Let's just continue. Let's just continue. When you look at that one of November 2020, now that is where I am. So it's question number 4B. You look at it and you compare with this one. They multiplied the value by But they use different values. However, that one cannot be that way. But if I look at it, I see just the same thing. Huh? Yeah. Anyway, let's just continue. The thing is on how you do the question. The procedure of doing the question, that is how we should do it. That is how we should do that. So we can continue. I'll also do another question. Now, not on internal reconstruction. So, let me do now on the unimpartial. Unimpartial we'll do. Or you have any question on unimpartial before I choose any? Yes? Yes? November 2016. November 2016, we do which question? So November 2016 again, question 4B. We do that one over November 2016, question number 4B. Can do that one, November 2016. We do question number 4B. So this is what you've been given. November 2016. We are talking of question number 4B. So this is how the question reads. That the following information relates to Jumbo Limited. You have the net profit after tax for the year 2013, 2014, and 2015. Given on 1st of February 2024, and that is 2014, sorry. Rights issues of 1 share for each 5 shares outstanding was made at an exercise price of 5 shillings. For the rights issue, the number of shares outstanding was 5 million. Last day to exercise the rights issue was on 1st of March 2014. The value of ordinary shares immediately before the exercise of the rights on 1st of March 2014 was 11 shillings. They want the earning per share for at the end of each year, ended 31st December 2013, 2014, and we've been given 2015. That is what you were given there. So what I'll do, I'll just, to get the number of shares here, to get the earning per share, this is simply the basic EPS. will be given by what? We say that it should be the profit attributable to what? Ordinary shareholders, attributable, ordinary shareholders. Then you divide by the weighted average what? Average number of shares. Weighted average number of shares. That is how we get that value. So I will just begin by weighting of what? Weighting of shares. Weighting of shares here will be how much? I'm going to have the date here. All right. Then I will have the balance. I mean the share transaction, sorry. Share transaction. We'll have the number of shares. We'll have the weights. And this will be the weighted what? Shares. Now, the only transaction that is occurring in which year? 2014. And we were given the shares outstanding in 2014. So, 1st of January 2014. What is our balance brought down? What is our balance brought down? Here we have, this is for 5 what? Million. 5 million. So this one is 12 over 12. This will be 5 million. I will have on 1st of when? February. This is still for 2014. There was what we call the rights. On rights issue, we look at the one that were issued at full price. At full price. So we were told that they were issued for everyone and for every 5 shares. So I'll just say it will be the 5 million. I'll divide by 5. I get the number of shares there. They were issued at what value? They were issued at 5, but this is at the market price is at 11. So you just said 5 over 11. You know the one that were issued at full what? I said first, then you get the number of shares, then you multiply by the issue price over the market price per share. So one was for 5 shares. That is why I've divided by 5 to know the rise issue shares. Then you multiply by market price, divide by what? I mean the issue price divided by the market price. How much is it giving you? How? 45, 45. 45 in Guinea. Oh, that is 45. That is okay. So 454, 545. So multiply by how many months? Is it 10 over 12? 10 over 12. How much? Is it 10 over 12 or 9? 11. Since it's the 1st of what? April or February. So how many years to the year is 11? How many months to the year? 11. So how much is it giving you? 4? 660. So get the total. This is 5445. 54, 445. Hivyo 5,454,545, 5,416,666, right? We get the bonus here. Bonus will be that 5 million. I'll divide by 5. I'll multiply now by 6 over what? 11. The 6 over 11. How much is it giving you? The bonus is just the difference. 11 minus 5. So how much is it giving you? Fifty-four. 54. So that is 545, 455.5 here. So I should have 5. Is that okay? So shares issued at no consideration are not weighted. You cross multiply. So how much is it giving you? $551, 541, 666. So this is 667. So if you add, this is giving you 6 million. If you take 54, 5, you add 545, 455. Nakupea ngapi? Get the total here? Yeah? 59, 58, 333. Hivyo. Umeweka 0.7. Siko hivyo. So we can get the basic EPS. EPS in 2014 itakuwa ngapi? In 2013 will be, what was the net profit in 2013? Was that what? 30 million. By then the shares were how much? 3 or 5 million. Yeah, so how much is it giving you? In 2014, profit here we've been given 38. You just divide by this is 50 what? 59, 58, 333. 2015 will be given by this is how much? 45 million. You still divide by 59 what? 58, 333. So how much is it giving you? This one will be not, it will be 6 what? It will be 6 million. Not this one. Umejua ni kwa nini? This will be, hizi ndio utapeleka the other year. In 2015 itakuwa inaanza aje? or the weighted. It will be now the 6 million. Multiply here by 12 over which will be 6 million. Yeah, should be that. Unanielewa? That is how it should be. So how much are you getting there? Yes? The first one is 6. Second one? 6.3. 37. These are the one. 7. 7.5. And that is how you are to do that. Any other question? Any other question you are having? November 20. So we do November 2017 again. And do November 2017. And I'm hoping this one is having diluted now. We do both that with diluted EPS. Is it having diluted EPS? All right. Then we can do that one. If it's having diluted EPS, because I want to just finalize it. Yeah, November 2017. We are doing a question in December, not November. December 2017 and 4B. December 2017 and 4. December 2017 4B. That is now what we are doing. December 2017 4B. So this is what you've been given. You've been given that the following information relate to the 𝐍𝐚𝐢𝐫 Limited for the year ended 31st May, May 2016. Given the net profit for the company, attributable to preference shareholders and what? Ordinary shareholders of the company was 14.6 million. That is to tell you that they have not less the preference what? Dividend. Information on ordinary shares was as follows. Ordinary shares of 𝐿10 each in issue at 1st of June 2015. Ordinary shares issued on 1st of September 2015 at full price. They are 1.0. The average market price of the shares of the year ended 31st May 2016 was 𝐿100. And the closing price as 31st May 2016 are 𝐿110. Being given there that on 1st of January 2016, 300,000 partly paid ordinary shares of 𝐿10 each were issued. They were issued at 80 per share, with 𝐿40 payable on 1st of January 2016 and 40 payable on January 2017. Dividend participation was 50% until fully paid. Convertible loan stock of 20 million at an interest rate of 5% per annum was issued on 1st of April 2015. Half of the year interest was payable on 30th September, 31st March each year. Each 𝐿1,000 of the loan was converted into shares on 1st of April 2016 when the market price of the shares was 𝐿100 per share. Shillings 1 million of convertible preference shares of 𝐿 were issued in the year ended 31st May 2012. Dividends were to be paid out yearly on 30th November and 31st May at the rate of 6% per annum. The preference shares were convertible into ordinary shares at the option of the preference shareholders. The basis of 2 ordinary shares of each preference share held. Holders of 600,000 preference share converted them into ordinary shares on 1st of when? December 2015. Given the corporate tax rate there, and they want the basic EPS and the diluted EPS. So we begin with the weighting of what? Weighting of shares. We have the weighting of shares. So I'm going to have the date here. I will have the share transaction. I will have the number of shares. I will have the weight. Then we'll have the weighted what? Shares. That is what we are having there. So we'll begin. On additional information number 2, that is where our information is. This is on 1st of when? 1st of June 2015. So we have 1st of June 2015. How much? 1st of June 2015. Zilikuwa ngapi? So we'll have, they were issued the balances at the beginning. Remember, that is when our year is starting. Remember, our year inaanza lini? 1st of June 2015 to when? Yeah, 31st of May 2016. So this is how much? I will use them in million as they are. The 6 million. So multiply by. So this will be how much? It will be 6 million. All right. Now there is also on the issue at full price. This was on when? 1st of 30th of what? Imeandikwa that 1st of September 2015. Issue at full price. Ni ngapi? Issue at full price here is a 1 point. I'll multiply by how many months? 9? Yeah, 9 months. So inakupea ngapi? How much is it giving you? It's giving you 900 what? After every share transaction, we get the summation. This is 7.2. This is 6 point. Which other date follows there? On the additional information number 2, the transaction that occurred was on 1st of when? January. But when you look at the preference shares on additional information number 4, on the last statement there for preference share, when did this conversion occur? It occurred on when? Si ndio inafaa kufuata. 1st of December 2015. There was conversion of what? Preference shares. Now, how are they converting preference shares? We were told that preference shares were convertible into what? The preference shares are convertible into ordinary shares at the option of preference shareholder. At the option of how much? On the basis of 2 ordinary shares for each preference share held. So 2 for each. So I just divide by 2. So this is 600,000. If I divide by 10, inakupea the preference shares. What is the preference shares? Kwanza tunajua preference shares 60,000. Ndio. Iko sawa? 60,000 I will divide by 2. Is giving you how much? Tulikuwa tumeambiwa for each 2 ordinary shares should be you multiply. Let me just write here 1 for 2. So we have in 60,000 that have been converted. So it will be how much? Unanielewa? For every 1 preference shares, they are given 2 what? 2 ordinary shares. Sawa sawa. So you multiply by that. How much is it giving you? Yes? 120. So we will wait it for how many months? Going to wait for how many months? Six. So how much is it giving you? Afisa, una chenye naona unaangalia sana. Ni gani hapo umepotea? Conversion. Soma hiyo additional information number 4. We are multiplying. Meambiwa for each preference share. So what is our preference share? Each preference share tunapewa how many shares? 2 ordinary shares. Hapa sisi tunataka kujua what are the ordinary shares that they have been given. All right. So we continue. On 1st of January 2016, hii imekupea ngapi? 60,000. Get the total? The 120. This 73,20,000. This is 60,000. 69,60. Now on 1st of January 2016, on number 2, the average market price of the shares for the year ended 31st May 2016 was shillings, and the closing price of the shares was 110. On 1st of January 2016, 300,000 partly paid ordinary shares of shillings 10 each were issued. They were issued at shillings 80 per share, with 40 payable on 1st of January 2016. So our concern is the issue of the partly paid ordinary shares, meaning that we'll only be concerned with what was paid. So here issue or partly paid ordinary shares. So it will be how much? It will be 300,000. I'll multiply the paid 40 over what? 80. Remember the issue price is 80, but what they paid is just the 50%. All right? So how much is he giving you? In an pair 100 and what? So weight it effectively from that date. 5 over 12. We multiply by 5 over 12, how much is he giving you? He's giving you 62,500. Get the summation. Get the total. Yes? 70? 70? 2,500. Evo. Is the other one? Will be 74,070,000. So we go to additional information number 3. It was on 1st of April 2016. 1st of April 2016. Conversion of what? Loan stock. So this is what you've been given, that convertible loan stock of shillings 20 million at an interest rate of 5% per annum was issued at verbally. This was on 1st of April 2015. Half of the year interest was payable on 30th September and 31st March each year. Each shillings 1,000 of the loan stock was convertible at the holder's option of 300 ordinary shares at 10 times. Shillings 5 million of the loan stock was converted into ordinary what? Shares. So I'll have the 5 million. I'll divide by 1,000, and then you multiply by what in this case they were converted, were convertible into 300 shares. How much is it giving you? Yes? It is 1.5. So multiply by, this is 2 over 12 from April and May. So 2 over 12, how much is it giving you? 2 over 12, how much is it giving you? Yes? 250. 250,000, right? So get the total. This is 8 and 9, 70,000. This is 72. 72. 500. So we can get the profit attributable to ordinary shares. Profits attributable to ordinary shares. What was the profit after tax? We were given 14.6 million. All right. We're supposed to less the free prime what? preference dividend. So I will have the preference dividend before the conversion. So, right? Preference dividend on additional information number 4. They should be 6%. 1 million you multiply by 10, that is 10 million, right? 10 million. No, not shillings, 1 million. That means it'd be 1 million. So 1 million there, all right? So before conversion, they had existed for how many months? 6 months. So I'll multiply by 6/12. How much were they able to pay on the whole amount? Then they have converted 600,000. So you will have 400,000. Multiply by 6/12. So what will be the profit attributable to ordinary shareholders? For the first one, how much are you getting? Is it 300,000? First one you are getting how much? Should be 3 or 30. Is it 3 or 30? 30,000. And these are the one you're getting how much? Should be 20. Is it 24,000? What is the profit attributable to ordinary shareholders? So that we know the basic EPS. Our basic EPS will be how much? Yeah? This is how much? Yeah? Or this is 12,000. If you minus all that, inakupea ngapi? Minus that, how much is it giving you? Yes? 14. 558,000. 558,000. Just divide by 72 what? 512. 2.001. We go to diluted EPS. On diluted EPS, we'll consider the potential what? Ordinary shares. Potential. Ordinary. Here we have, there is a convertible preference shares. Convertible preference shares. Now, for convertible preference shares, what we know is they pay, if they convert them to preference shares, what will be our incremental profits? They will not pay the preference dividend, right? So our incremental profits will be how much? It will be equals to 6% of 1 million. I'll multiply by 6/12. Plus these are the 6% of 400,000, 6/12. Yeah, it's just this one. How much is it giving you? Should be 42,000. What about our incremental shares? Our incremental shares will be how much? You'll have the amount initially. The shares, they were how much initially? Shares were 1 million. I mean, 100,000. So you just have 100,000, you multiply by 2 times 6/12, right? So the shares are at the start of the year. Then convert 60,000 zimebaki 40. So 40,000 you multiply by 2, 6/12. How much is it giving you? Yes? 140,000. So get the incremental EPS. Incremental EPS will be 42,000 divided by 140. How much is it giving you? 0.3. It is less than the basic EPS, meaning that this one is what? Is diluted, right? We go to convertible loan stock. Convertible loan. If we not convert that, we'll have the increment of profit. Increment of profit will be now the interest. So interest itakuwa ngapi? Interest will be, initially the convertible loan stock was 20 million. The rate was 5%. So it is 5%, 20 million. I'll multiply by how much? Before conversion, that is 10 months, 10/12, plus 5%, they have converted how much? 5 million, right? 5 million is what was converted. So that means it remains how much? 15 million. This is 2/12. You multiply by 0.7. That is 1 minus what? The taxation. How much is it giving you? How much? Hmm? 787. You have multiplied by 0.7. 5. Ivo. Na ifete ikiwa mfupi. Sasa nitakubali tena. Kwa hiyo rudieni tena. Sasa hii umeikataa. 670 point what? 670? 833. What about our incremental shares? Incremental shares will be the 20 million. Initially, they were 20 million, you divide by what? 1,000, they were convertible into 300. 10/12. Then I add 15 million divided by, this is 1,000, you multiply by 300. This is 2/12. So how much is it giving you? The increment of shares? What is the increment of shares? Remainder of shares, how much is he giving you? Yes? 5750. Nimekubali hivyo? Hello, 20,000 times 300 times tuone kama 2,000 you multiply by 300. Niko na calculator. 2,300 times 10/12. Plus this other one is 15,000. Oh, hii ni 20. Inga hapa anaweza kuwa ametumia 2,000. It should be 20. So tukitumia hiyo correct. Uko sure? Am I? Oh, sure. So that means now our incremental EPS itakuwa ngapi? 678.33 divided by 5750. How much? $0.12. Sawa. Is it dilutive? It is less than our basic EPS. Therefore, it's diluted. So that means our diluted EPS will be earnings attributable to ordinary shareholders. The quarter 14,558,000. For the free prime shares, 42,000. The 42 years incremental profit. This is 678.33. I'll divide by the weighted average 72,500. Here the shares at 140. And here the shares are increasing by how much? 7. So if you divide all that, you will get our diluted EPS. What is our diluted EPS? You're getting 1.16. Equal to. That is how get that one. Imeeleweka? That is how you're supposed to do that. Kazi ni mingi. Yeah, it just when transaction occurred. So that is done. Huh? Iko na shida. Huh? How do we do it? Is ni pesa na convert into shares. So ukiambiwa kama each shillings 1,000 of the loan stock is convertible into how many shares? 300. Umenielewa? So kama tunasema hivi, if for every shillings 1,000 you have, utapewa 300 shares. What about if I convert 5 million? I'll get hivyo. Ni kujiuliza tu. Sawa sawa. Yeah, that is as simple as that. So we'll meet in our next class. Huh? Si ndio sasa nasema. Now we'll do on the groups still. Group. Ama tuanze na cash flows. So we'll do on the cash flows then in the next class.